Bitcoin, the pioneering cryptocurrency, has emerged as a formidable force in the financial world. Its decentralized nature, secure transactions, and potential for high returns have captivated investors worldwide. From its humble beginnings as a niche digital currency, Bitcoin has gained significant traction, attracting the attention of individuals, businesses, and now, major financial institutions. This surge in interest signifies a paradigm shift in the financial landscape, as traditional players recognize the transformative potential of Bitcoin. The rise of Bitcoin can be attributed to several factors. Its decentralized structure, operating independently of central banks and governments, provides a level of autonomy and security that traditional financial systems lack. Bitcoin transactions are recorded on a public ledger called the blockchain, ensuring transparency and immutability. Moreover, Bitcoin's limited supply, capped at 21 million coins, creates scarcity, potentially driving up its value over time. These unique characteristics have fueled Bitcoin's ascent, challenging the established order of traditional finance. As Bitcoin's popularity has grown, its price has experienced significant volatility. However, despite these fluctuations, its overall trajectory has been upward, attracting both seasoned investors and newcomers seeking to capitalize on its potential. The emergence of cryptocurrency exchanges and trading platforms has facilitated wider access to Bitcoin, further contributing to its mainstream adoption. The increasing acceptance of Bitcoin as a legitimate asset class is evident in the growing number of businesses accepting it as payment for goods and services. The rise of Bitcoin has not been without its critics. Skeptics point to its volatility, potential for illicit use, and lack of regulation as reasons for caution. However, proponents argue that Bitcoin's underlying technology, the blockchain, has the potential to revolutionize various industries beyond finance, including supply chain management, healthcare, and voting systems. As Bitcoin continues to evolve and mature, its impact on the global economy is likely to become even more pronounced. The entry of institutional investors into the Bitcoin market marks a significant turning point in its evolution. Large financial institutions, including banks, investment firms, and hedge funds, have begun to embrace Bitcoin, recognizing its potential as a store of value and a hedge against inflation. This institutional adoption brings with it a wave of capital, expertise, and legitimacy, further solidifying Bitcoin's position in the financial world. Several factors have driven institutional interest in Bitcoin. The unprecedented monetary expansion by central banks in response to the 2008 financial crisis and the COVID-19 pandemic has raised concerns about inflation and the devaluation of fiat currencies. Bitcoin, with its limited supply and decentralized nature, is seen by some as a safe haven asset that can protect against these risks. Moreover, the growing awareness of Bitcoin's potential as a high-return investment has attracted institutions seeking to diversify their portfolios and enhance returns. The involvement of institutional players has brought about significant changes in the Bitcoin market. Their substantial capital inflows have contributed to Bitcoin's price appreciation, making it more attractive to both retail and institutional investors. Institutions have also introduced sophisticated trading strategies and risk management techniques to the market, enhancing its efficiency and maturity. The presence of established financial institutions has lent credibility to Bitcoin, mitigating concerns about its volatility and speculative nature. The growing institutional adoption of Bitcoin is a testament to its increasing acceptance as a legitimate asset class. As more institutions allocate funds to Bitcoin, its market capitalization and liquidity are expected to grow, further solidifying its position as a major player in the financial world. This institutionalization of Bitcoin is likely to have a profound impact on its future trajectory, paving the way for wider mainstream adoption and integration into traditional financial systems. Anthony Scaramucci, a prominent Wall Street figure and founder of Skybridge Capital, is a notable example of institutional adoption in the Bitcoin space. Scaramucci, known for his brief stint as White House Communications Director under President Donald Trump, has become a vocal advocate for Bitcoin, recognizing its potential to disrupt traditional finance. His firm, Skybridge Capital, has made significant investments in Bitcoin, signaling a shift in sentiment among Wall Street veterans. Scaramucci's embrace of Bitcoin stems from his belief in its underlying technology and its potential to transform the financial industry. He views Bitcoin as a superior store of value compared to traditional assets like gold, citing its limited supply, portability, and security. Scaramucci has also highlighted Bitcoin's potential as a hedge against inflation, particularly in light of the unprecedented monetary expansion by central banks in recent years. Skybridge Capital's investment in Bitcoin is a significant endorsement of the cryptocurrency's legitimacy. The firm, known for its expertise in alternative investments, has allocated a substantial portion of its portfolio to Bitcoin, demonstrating its confidence in its long-term growth potential. Scaramucci's public pronouncements on Bitcoin have also helped to raise its profile among institutional investors, encouraging others to consider its merits. Scaramucci's involvement in the Bitcoin space is indicative of a broader trend of Wall Street veterans embracing the cryptocurrency. As more prominent figures like Scaramucci lend their support to Bitcoin, it gains further credibility and attracts a wider range of investors. This institutional adoption is crucial for Bitcoin's continued growth and its integration into mainstream finance. Section 4. The impact of institutions, reshaping the Bitcoin landscape. The influx of institutional investors is reshaping the Bitcoin landscape in profound ways. Their substantial capital investments have contributed to Bitcoin's price appreciation, making it more attractive to both retail and institutional investors. Institutions have also introduced sophisticated trading strategies and risk management techniques to the market, enhancing its efficiency and maturity. The presence of established financial institutions has lent credibility to Bitcoin, mitigating concerns about its volatility and speculative nature. One of the most significant impacts of institutional involvement is the increased liquidity in the Bitcoin market. Institutions' large-scale trading activities have made it easier for investors to buy and sell Bitcoin, reducing price slippage and enhancing market efficiency. This improved liquidity has also attracted more retail investors, further contributing to Bitcoin's price appreciation. The increased participation of both institutional and retail investors has created a more robust and vibrant market. Institutions have also brought with them a higher level of sophistication and professionalism to the Bitcoin market. Their expertise in risk management, portfolio allocation, and regulatory compliance has helped to mitigate some of the risks associated with Bitcoin, making it a more attractive investment for a wider range of investors. The presence of institutional players has also encouraged the development of more sophisticated trading platforms and custodial services, further enhancing the market's infrastructure. The institutionalization of Bitcoin is also leading to greater regulatory scrutiny. Governments and regulatory bodies are increasingly paying attention to the cryptocurrency market, seeking to establish frameworks that protect investors and prevent illicit activities. While some view regulation as a threat to Bitcoin's decentralized nature, others argue that it is necessary for its long-term sustainability and mainstream adoption. Section 5. The future of Bitcoin institutional investment and mainstream acceptance. The future of Bitcoin is inextricably linked to the continued involvement of institutional investors. As more institutions allocate funds to Bitcoin, its market capitalization and liquidity are expected to grow, further solidifying its position as a major player in the financial world. This institutionalization of Bitcoin is likely to have a profound impact on its future trajectory, paving the way for wider mainstream adoption and integration into traditional financial systems. The growing acceptance of Bitcoin by institutional investors is a testament to its increasing legitimacy as an asset class. As more institutions recognize Bitcoin's potential as a store of value, a hedge against inflation, and a high-return investment, its adoption is likely to accelerate. This institutional demand is expected to drive further price appreciation, making Bitcoin even more attractive to both retail and institutional investors. The mainstream adoption of Bitcoin is also contingent on the development of a robust regulatory framework. Governments and regulatory bodies are working to establish guidelines that address concerns about money laundering, terrorist financing, and investor protection. While some view regulation as a threat to Bitcoin's decentralized nature, others argue that it is necessary for its long-term sustainability and mainstream adoption. A clear and consistent regulatory environment is essential for building trust and encouraging wider participation in the Bitcoin market. The future of Bitcoin is bright, driven by the convergence of institutional investment, technological advancements, and growing mainstream acceptance. As Bitcoin continues to mature and evolve, its transformative potential is likely to be realized, revolutionizing the financial industry and beyond. Section 6. Conclusion. Bitcoin's transformative potential. Bitcoin's journey from a niche digital currency to a mainstream financial asset is a testament to its transformative potential. The entry of institutional investors, exemplified by figures like Anthony Scaramucci, has significantly accelerated Bitcoin's adoption, bringing with it capital, expertise, and legitimacy. The institutionalization of Bitcoin is reshaping the market, enhancing liquidity, introducing sophisticated trading strategies, and paving the way for wider mainstream acceptance. The impact of institutional investment on Bitcoin's future is profound. As more institutions recognize Bitcoin's potential as a store of value, a hedge against inflation, and a high-return investment, its adoption is likely to accelerate. This institutional demand is expected to drive further price appreciation, making Bitcoin even more attractive to both retail and institutional investors. The development of a robust regulatory framework is crucial for building trust and encouraging wider participation in the Bitcoin market. Bitcoin's decentralized nature, secure transactions, and limited supply have positioned it as a disruptive force in the financial world. Its potential to challenge traditional financial systems and empower individuals is undeniable. As Bitcoin continues to evolve and mature, its transformative potential is likely to be realized, revolutionizing the financial industry and beyond. The future of finance is being rewritten, and Bitcoin is at the forefront of this revolution.